All right, everybody, welcome to Pup's Office Hours. I'm Danny Naz. You know me as the Pup of Wall Street. It's February 9th, 7 p.m. Let's get started. So just taking a little bit to tell you a little bit about myself. I am an active swing and day trader. Been swing trading for about 2 years full-time, 5 years pretty consistently, 8 years in the markets. And yeah, I've just been day trading options for the last 2 years, and excited to have my members back in with office hours here. And then obviously for everybody new, this is basically office hours. I'm running every 2 weeks, a 75 to 90-minute session, and just going over market reviews, my post-market process, maybe any trade ideas that I put out this week. We can take a look and do a review of where they're at right now. Actually, today I'm going to go over a trade that I took with NVIDIA, give you a little bit more input into my thought process. Hopefully it's helpful to see how I trade, and maybe give you some ideas of how you might be able to trade as well and adapt some of my style to your style. So yeah, I'm going to do chart requests towards the end. It's probably take about 10-15 minutes to do chart requests. And then I usually leave like the last 10 to 15 minutes up for Q&A in case you all have any questions. So hold your questions, obviously, and your chart requests till the end, and we'll get to them as they come. And just to talk really quickly, I'm going to be doing most of my charting on TrendSpider. And then I also use options flow and dark pool from Blackbox, and then do some algo trading ideas from TradyTick. So I'll try and get into a little of that and introduce you to that if you haven't seen it before. So give me 1 second. Let me switch up my screen here. All right, so today was really an interesting day in the market. We saw another continuation. Let's actually just jump on SPY real quick. And so I had this marked off here as, is this a 1 or is this a B? And right now it's looking like a 1-2 setup, potentially a 1-2-1-2 setup here. So it's, you know, for me, the market is always going to be guilty until proven innocent. And, you know, we've retraced back up to the February 2nd highs here at 456.60. So it's definitely good, but we have to still be very cautious because we can see, you know, a 5-wave move back up, and this could still look like an ABC retracement, right? So you could have your A wave, your B wave, and then your C wave down here. So that's why, like, yeah, you know, a lot of the times if you zoom out, you're going to see these falls tend to be counter trend rallies, right? So this is the trend. Here's your counter trend rally, ABC. Now you resume the trend, right? Counter trend, ABC, resume the trend. So now what we're looking at is this a counter trend, A, B, C, or is this the final ABC here? And are we going to continue back higher? So I think that obviously that's really the question that remains at the moment. Happy to trade this to the upside for the time being, but I'm certainly not ready to say, all right, going to put my swing trader hat firmly on and we're going to start going long. So we still have to be very cautious. Keep in mind, tomorrow we do have CPI data, so that's the Consumer Price Index. Looks like a little of that was leaked. I don't know if the White House leaked it a little early or leaked the inclination of what it might be. So far, that's looking like it's actually going to be pretty decent. So let's wait and see if that's actually what it is. Again, I'm not really sure, and I don't think anybody's honestly going to be really sure until we get the CPI data tomorrow. So yeah, so here's the cues. Again, very similar story, potential wave 5 top, you know, ABC correction to the downside. Do we have a 1-2-1-2 setup coming back up? Again, don't know, but that's kind of what I'm leaning towards. And, you know, you never want to have necessarily a bias either way when you're looking at the market. But, you know, I'm only looking off of price action, volume, you know, where my supply and demand zones are. I'm also looking at Elliott wave, which you'll see in some of the charts that I'm going to review today. So here, like, you know, just looking at the cues, like we've got two pretty big supply zones up here, and we're chopping through a supply zone right now. And so if we get through, let's say 370, then it's likely we can see a 5 to 7 point move back up on the Qs, back up to this range. And then over this, again, another volume gap here, we can see even higher up into the supply zone here. So again, for me, guilty until proven innocent. I'm not necessarily ready to say that, bear market over, correction over, and we're headed higher. Not yet, not yet. We'll certainly be ready when that happens, but I don't see that just yet. IWM, very similar story, a little weaker than the Qs and the SPY, but still looking pretty decent to the upside here. So let's see. Let's talk a little bit about NVIDIA, and kind of want to take you through. I did trade NVIDIA a few times today, and just want to take you through some of the charts here that I was looking at and why I took the trade where I took it. So if we go back to March of 21, you could see, just go back a little further, we had a big consolidation range right back here. Let me mark this off. And, we were basically chopping sideways almost for, I don't know, like 6 months, right? From September to March, give or take. And then we started to make a series of higher highs and higher lows. And you could see that, pretty much, right. Let me grab my tool here. So, you have a high, a higher low, a higher high, a higher low, a higher high, a higher low, higher high, higher low. And so that's, to me, that's bullish, that's bullish price action. And so obviously, we're way past this level here, but what you have to understand is, the market moves in waves. And so I'm looking at this as, where are we Elliott wave wise in terms of this move and this move higher? And I don't know if I marked it off on the weekly chart. We were just on the daily. Yeah, I didn't do it there, but we could do it really quick so you can see. So, the way I looked at this chart, it was very simple. So this was a wave 1, wave 2, wave 3 is up here, and then wave 4 right back here. And so, usually within each wave, each impulsive wave, you have 5 waves up, and then the corrective waves, you have ABCs usually down, and sometimes you have like some kind of complex or symmetrical kind of wedge or triangle in wave 4. And a lot of the times when you have, let's say, your wave, your wave 1, 2 channel. So let's move that up here. So this is our wave 1, 2 right here. So this is our channel here for wave 1, 2. And so look at the top, look at how the top acted as support along with that moving average cloud. So again, we're getting pullbacks right here to that 55 EMA, 55 EMA, 55 EMA, and now we had a really big move up. And to me, this, with all these gaps, right? Gap right there, to me, that just signals, wave 3 activity. Let me get my spotlight tool on here so you can see it a little better. There we go. So yeah, so I mean, this really looked like a wave 3 right here. So obviously preceding wave 3, you're gonna have wave 4. And what I like to do is I like to look for either a back test at the top of the channel or a back test to that center of that 1, 2 channel. And that's exactly what we got right there. So that's really what got me excited about NVIDIA in the last couple of weeks. And so that's really, what I was looking at on the daily chart. Let's now look at the 30-minute chart. And basically what I'm day trading, actually, before we even go to the 30-minute chart, let's go to the 65-minute chart. So I believe I have this charted out here as well. Bear with me while this is sometimes when you do these live chartings, yeah, you're at the will of the software loading. So let me hit refresh and see. There we go. Okay, so you could see on a 65-minute chart, we had this kind of falling, broadening formation where you're having a series of lower highs and lower lows, but we're getting an expansion there. And so when we hit that bottom here, right at 209, again, we made a new high, a new low, a new higher low, right? A new higher high, new higher low, new higher high, new higher low. And right now today we're making a new higher high, but look at how it's contained within this channel going up, right? So easy to see these two channels, and I'll draw it out so you can see it. Very easy to see these channels, right? So you have a bottom here and you have a bottom there. So let's extend that out. And then you're going to go up to the next high, which is right there. And you could see that's exactly where we are today with NVIDIA. So that's the 65-minute. And again, I like to start on the weekly and work my way down. So I went to the weekly, then I went down to the daily. Now I'm at the 65-minute. Now let's go to the 30-minute chart. And this is really where things got interesting because obviously this is a wedge right here. I already have that drawn out. These vertical lines, first one's Mondays open, the second one's Tuesdays open, the third one is Wednesdays open, today's open. So the first thing I noticed right off the bat from that low is this is a clear wave 1-2 setup. And so usually after obviously 1-2, you're going to get a wave 3. So that's pretty much what we're seeing right here. Right? Wave 1-2. This is likely 3, but it's not the complete 3, right? 3 is probably somewhere up here. What this is here is another 1-2. It's like a nested 1-2. Change that real quick. All right, that one doesn't want to get deleted, so never mind. So this is another 1-2 right here. And when you have these nested 1-2, 1-2s, things get pretty interesting because that second 1-2 is actually the 1-2 of wave 3, right? So you have 1-2, and then wave 3 will be up here, then possible 4 pullback, and then a 5 up here. This wave 3 is more likely up there. And so that's really, again, once I saw this 1-2 setup, I'm like, all right, need to really start to pay attention here. Look, you even got that wave 3 gap up right there, right? So it's wave 1, 2, 3, contracting triangle 4, 5, A, B, C. That's where our triangle starts to form. Now we've got another subwave, 1, 2 right there, another wave 3 right there. So let's go down now to, well, first let me talk about.
Hey, Dan, Danny, I think your screen is frozen.
Is it frozen? All right, hold on one second.
It's just showing the NVIDIA screen.
Yeah.
If you're typing on it, we're not seeing it.
Okay, 1 second. Let me resume share. How about now?
Okay, yeah.
You see my cursor moving?
Yes, yes.
All right, thank you so much. Appreciate that. Bear with me 1 second. Okay, looks like there was some permission issues. There we go. So here we have our triangle setup, right? A wave 4 triangle right here. And what I really was interested in was this pullback right there. So let's take a closer look at that pullback, and I'll show you exactly why I got in where I got in right here. And I believe I have that marked off on the 5-minute chart, but I want to illustrate it here. So, when you had that first pullback here from wave 1 into wave 2, and I'll delete that for a second, you could see there's 2 wicks right here, and they were higher lows, right? So I take that one to that one, and I extend it out. And so what I'm watching for is that third touch, and we got that right there. That next candle, that next 30-minute candle right here, this is an outside bar. And what that means is this bar is the low and the high are outside of the previous candle's low and high. That's a very bullish, it's basically a bullish engulfing candle. It's a bullish reversal candle as well. And we got a reversal right off of that wedge bottom. So this is where I first entered the trade here on NVIDIA. So now let me go down to the 5-minute. And you could see even clearer now that we've got a broadening formation. So what I wound up doing this morning was on the open, when we pulled back, right? Because we pretty much came up, we popped up to the 21 moving average, failed, came right back down on, this was yesterday. We hit that 786 retracement almost perfectly, which is right on that broadening formation. And we started to bounce. And so I took my first entry there at 250. And so now, again, you're seeing this wave 1, subwave 1 up here, wave 2 pullback. And then we came right back up to that previous high, right at 250. This is where I closed out my 250 contracts. And I rolled up on the breakout here of the 255 before the close of the day, because we closed pretty much right over my first target. So that was good to go. Then when we opened up this morning, we had a push right into the top of this broadening formation here. And you could see 1, 2, 3 candles, and then we failed. We came right back down to the the 8 EMA, pushed back up into that broadening formation, failed twice again, came back down, but had a higher low. and then came right back up to the broadening formation, and then we broke out. And at that point, I closed out my 265s and I rolled up to the 255s, and then I rolled up to the 265. So that's basically my second roll. Just to take a step back, when I'm rolling, so let's say I took 10 contracts on the 1050s. When I sell that out, I'm basically using like 20, maybe 25% of my profit and rolling into my next one. So the worst thing that happens is this contract rolls over and goes to zero, but I still have 75% of the profits from this trade, and I'm only losing the 25% of the profits that I put into this roll. In this case, it worked out really well because we got that second breakout up here, and I was able to close those out and do the same exact thing. This time I used a little more profit. I think I used more, closer to 40%, because again, I'm playing with house money at this point. So now we have, and this was today's candles, we have a massive, massive move up. And before the end of the day, right into 265, I closed out my contracts up here, right at basically 266. Now, I'm not waiting until that level hits. I'm scaling out on the way up. So that's really important to understand. I'm not just buying 10 contracts and then waiting till my target hits and selling 10 contracts. I'm scaling out, a couple here, a couple there, and then I'll finally close it out here. And then at the end of the day, I actually rolled up one more time, but this time I kind of went a little further out of the money. I went to the 280s because it was already my third roll up. I wasn't really interested in tomorrow's Thursday. You know, we only have 2 more days left in the week. And I figured, you know what? It's closing really strong. I think there's a really good chance that we gap up tomorrow. Even though we had a 6% day, you know, NVIDIA is one of those types of stocks that it can continue for a multi-day run. Now, we haven't seen that in a while in the market in general. But again, I wouldn't have necessarily taken the trade if it was my first trade on NVIDIA. But because it was the third trade at this point, I was happy to take the risk. And so that's kind of what I did with NVIDIA today. It wasn't something that I was looking at necessarily this morning when, you know, pre-market for my swing trade kind of ideas. But from a day trade perspective, I like day trading the same type of stocks, like your NVIDIAs, your Amazons, your Teslas. I just find that trading the same, as specifically talking about day trading, I find that day trading the same names, it helps you understand how they move, what their personality is, what, you know, how they move around their levels, what type of formations do they have, whether it's wedges, cups and handles. You know, it's much more important, at least from a day trading perspective, to really be super laser focused on a smaller set of names. It's really, really important. Learn those levels really, really well, and you'll always have something to trade. You know, it may take 6 months, it might take a year for you to learn 15, 20 stocks really well. But after that time, then it's like any given day, you know the levels, you know how to trade them. And that's basically what my approach to day trading is. Something else that I've been watching for a little while has been financials, but more importantly, Morgan Stanley. And so those of you who are in my room know that I put this, I don't remember what day I put it. I don't know if it was Monday or maybe it was last Friday, but I did put out this trade alert, swing trade alert for Morgan Stanley. So what I didn't know, and this is really my bad. I should have seen this, but on Spaces last night, I was talking with one of my fellow traders, and he was talking about Morgan Stanley. He's like, "Yeah, you got to look at the monthly chart and zoom out." So look at this monthly chart on Morgan Stanley. This is really, really cool. So back in 2000, in August and September 2000, we made an all-time high at $93, and we haven't revisited it until today. Well, not till today, but until this past 4 months. And so look at this. You know, we hit that 93. ABC correction to the downside. Let's actually chart that out so you could see it. Elliott wave does work on all time frames. So the bigger the time frame, the easier it is, I think, to see the different waves, right? So that's an A, B, C. How can we tell if this is a C wave? Basically, what we're going to do is we're going to take a fib extension tool and go from our A wave down to our top of our A wave. And well, actually, this one didn't even come near the 1272 extension, but sometimes it can come down as far as that 1618 extension. I don't know why that's not on. Probably extended too far from here because this is a monthly chart, which is okay. But now you can see when we made this low back in 2008, this was right around the housing crisis. Let's actually do this. So we can take our Elliott wave tool and, looks like we got a wave 1-2 right here, right? Pretty impulsive move up, an ABC correction to the downside. Let's actually move that over. Wave 2 is probably right there. So how do we project off of wave 2? How do we find the targets to the upside? Basically what I'd use is a Fibic projection tool. And what it does is it takes 3 points. So I'm going to take the low of 1, the high of 1, and then the low of 2, and I'm going to project that higher. And you could see, let me just put my fib extensions to the upside here to get that 3618 there as well. Look at how beautifully this played out right here. This is your 100% extension, or 100%, I should say, projection. And how that works, basically, this is your wave 1, and then you're projecting from wave 1. Oh, you know what? I have it on log, so that's going to make a difference. But in any event, you're going to take your wave 1 and you're going to project it right here from the low. And that's generally going to be your first target, your 100% Fibonacci projection. And that's exactly where we hit right there. I had it on log scale. So log scale kind of skews and we're on a higher time frame. So it's going to make a difference. So that's why I just jumped off of log real quick. But in any event, look at how we come back into that 100% projection. We break out, we retest for a couple of months. We break out what's our next level, the 1618 extension. Nailed that perfectly. Came back, we retested it, failed a couple of times, broke back out, back tested. We failed pretty big here, came back up, and now we're back through the 1618 here. Then your next target is going to be that 2618, exactly where we hit here in June and July of last week. And now we're flagging off of that and we're breaking out. So when you go to those higher time frames, the weekly, the monthly, especially with names like Apple, Nvidia, Morgan Stanley, that companies that have been around for decades, it makes sense to go up to that monthly chart because you just don't know how, 10, 20 years ago, did they make highs? Are we now past those highs? And with Morgan Stanley, it makes a lot of sense. We're breaking out of a 20-year base pretty much, right? It's a nice big cup base right here. And so for me, that's very bullish. So when we go down now to the daily chart, this is why I really liked the move through 106.50. And look at the move we got. Now, Morgan Stanley, not a name that you're going to see move, multi, percent a day. Maybe you'll get a 2% move. We got a 2% move today, but it's been really bullish off of the bottom here. I mean, we've had mostly green days with, it looked 2 spinning tops and, another red candle there. So not really that bad, but on this move over 106, I'm seeing possibly 115 and 119, figure 120 as my top end target. And so when we go down to the 30-minute chart, to me, this looks like a wave 1-2, and a wave 3. And wave 3 off of your 1-2 projection, you generally will see it between that 1618 and that 200%. A lot of the times when you see my charts, you're going to see like a yellow area that's going to say like target zone like this. That's why my target zones are usually between that 1618 and that 200% extension. I'm not trying to time the top, so that's why we have a little bit of a range. But once we see price come into the target zone, I'll generally go down to like a lower time frame, and then I'll start to see, what wave patterns are forming on the lower time frames, and that will give me a little extra guidance as far as where I should scale out of a trade if I'm already in it, or where I could potentially get a pullback entry. Sorry, TrendSpotter froze again there. So if we look at this pretty closely, this could be potentially wave 5, right? So we have, or like a sub wave 5. We have, let's say, a 1, 2, 3, triangle 4, 5, right? So this could be an A, B, C. So we'll have to wait and see how this plays out. I still really like this through 106.50. A lot of the times when we do break out, though, you got to watch for the back test. And I don't think we've got the back test just yet because we just broke out. So what I'd be watching for on Morgan Stanley might be something like this, where we've already broken out. Maybe we come into that that 1272 extension at 110. Maybe we get rejected. We come back, we retest 106.50, and then we come up, we make our next move higher. And again, I would target like 115 and then 120 to the upside on Morgan Stanley. So really quick, we're about 30 minutes in. I'm going to just do one more chart. I was hoping I had enough time to do all three. And so this was another trade idea that I put out. I believe this was last week. It took a little while for this one to come together, but it came together really well. So this IPO'd back in June of 21 and made this high, came back down. Looks like just kind of like an ABC retracement right off the start. And then we went right into a 1, 2, 3. Again, let me get my spotlight tool here. So we went into a 1, 2, 3, triangle 4, 5. So to me, this move right here, that's wave one for sure. I'm pretty confident on that. And so what makes me extra confident is that right off of that wave one, you're generally going to get in your wave two an ABC correction. So here's your wave A, here's your counter trend rally wave B, and here's your ABC back down for wave C. Now you got that wave C bottom. So for me, I could have taken the trade up here, but really what I wanted to do is the first thing I wanted to see is, can we break that IPO anchored VWAP? That's anchored right there to the IPO candle. And we did that 4 days ago. So that's when I got really, really interested. All right, now we're getting some strength. My next main target I was looking for, or next main level to break, was going to be $70 because I knew that that was going to give me the break of the downtrend line, which is what we see right here, but also of that previous high right here on February 1st. We got that candle yesterday. So I wound up taking an entry with shares on CFLT at $70. Then we also closed right over the swing high anchored VWAP, right? So that's here. That's your highest close from that swing high. We anchored the VWAP to there, and that's exactly where we closed over yesterday. That gave me even more confidence because my concern closing underneath that on the breakout is that's just going to be another level of resistance. And then look what happened today. We gapped up, and where did we back test to? Right to that swing high anchored VWAP, and we bounced. So let me make sure that that is on all time frames. It should be. So let's go down to the 30-minute chart. So it did not come back down. Let's see if I can just drop it here. Bear with me 1 second. So that's that one. Oh, here we go. Let's drop an anchored VWAP there. Perfect. So you could see now here on the 30-minute chart, I've kind of got my waves charted out again. So here's your wave one up. Here's your ABC correction. That's your wave two. And what do you get after wave two? You're going to get wave three, but wave three also has 5 subwaves. So here's wave 1 of 3. Here's your ABC correction. And here's wave 3 of 3. Now, wave 3 generally is your longest wave of your 5-wave move. When you're in your wave 3 of 3, which is exactly where we are now with Confluent, this is going to be good. And so what I see for my sub wave 3 of 3 is basically a move into that zone I talk about, that 1618 to 200% extension. Right now, that's going to be between 76.73 and 81.72. And that's just a projection off of that swing low, that swing high with the pivot point down here at wave 2. And so that gives me these blue Fibonacci projection levels. So I'm watching for a sub wave 3 target here. And so what you're going to get after wave 3, you're going to get a wave 4 pullback. That might be somewhere. And again, it's hard to say where it's going to be right now because we just don't know where it's going to stop. But you might get it somewhere down here, like around, I would say between 74 and 76. So if you're not already in here, I mean, it's hard to buy up here because the risk to reward isn't really that great, right? You might buy at 74 to get maybe a 4 to 7, 8 point move. It's not really that great. I mean, if you're playing, day trading options, then maybe it's okay. But for shares, I just think waiting for that back test makes more sense, right? So we're looking at the swing high anchored VWAP. Well, guess what? We got that breakout today, or that back test today, but we didn't get the retest yet. So there is a chance that, we could see something like this where we get that move into the target zone and then we get like another ABC retracement right back to to that anchored VWAP. So that's what I would be watching for Confluent, but it does look pretty good. No reason on this one to go down to the daily chart, or excuse me, to the 5-minute chart. I don't think I have it charted out on the 5. Let's see, because I'm not day trading this. Yeah, so I don't even have it charted there. So to me, I'm only using, the 30-minute and below for day trading, and I'm using the 65-minute and above for swing trading. It doesn't make any sense to go any lower time frame for swing trading. I like to take my entries on the 65, and then for day trading, I like to take my entries off of the 3 or the 5-minute. So those were the 3 names that I wanted to go over. I'm just going to take like 5 minutes, maybe 10, and I'm going to go over some of the trade ideas that I put out this week. We'll go up to the 65-minute, or excuse me, we'll go up to the daily. So this is Apple. Again, notice Apple on wave C, it pulled all the way back to 156, which was a 1618 extension to the downside, and also a 100% projection from a previous swing high, swing low. And so it bounced right off of there, and it was right off of this channel that you see here. We bounced right off the bottom of the channel as well. So it's really important not only to use these channels, but to use Fibonacci. You could also use anchored VWAP. Let's drop an anchored VWAP here and see where that leads us. It looks like it might be something that would work. Yeah, so we did lose that temporarily right here, but we regained it right there, right? And so on the flip side, on the top side, we'll want to drop another one right there. And as we zoom in, you could see we broke that anchored VWAP, that swing high anchored VWAP right there. And looks like we tried to come and back test it prior to yesterday, or prior to today, yesterday and the 2 days prior. But now we're back up to 176.28. Now, when I put the trade plan out, I said, watch 177, actually 176. That was my first target. It's exactly where we hit today. Now, tomorrow, if we see a move over 177, then I think we see 181 and then possibly all-time highs at 183. So I'm looking for potentially 183, 181 to 183, possibly this week if the market continues. Now, if we get really good CPI data tomorrow and it's not already priced in from whatever leak that happened, then I think that's very, very, very possible. So the other another trade idea I put out was Arch. Caught a cup and handle here. And I said entry 103.62. We got that breakout. We got a retest. We got a beautiful bounce. So this is really textbook. This is perfect, right? So you get the breakout right here. You got to move high, came somewhat close to the 1272. Then you got a pullback retest right here and a bounce. So you get your BRB, breakout, retest, bounce. I always look for these plays. If you miss the entry on the breakout, never chase. You 75% of the time you'll get a pullback entry. So no reason to chase. If you did chase it up here, then you're feeling pain down here. Like, you're down 3 or 4%. You're like, man, I missed my entry. You stop out right before this turns right back higher and continues to go. So it's just terrible for your psychology to take breakout trades by chasing them. Wait for the trade to come to you. And this was a great example of, you took it, you came back, you bought the retest or you bought the bounce and you're good to go. Now, when we have cup and handles, what we do is we measure the move. And so we take the bottom of the cup to the rim, and that's basically going to be our projected move. So that looks like the price target's going to be potentially 145. Now, I don't always wait for that level to hit. I will take profits prior, and you could actually see I have a 1618 extension off of this swing high right here and that swing low right there. So I'd be looking at 114 first and then 125. And if we can get over 125, then I think it's possible that we can see 137, which is a 200% extension, 145, which is our measured move, and then that 2618 extension at 157. Next one up is Bros. Gave us a wicked fake breakout right here, a little fake out on Monday. It did break that entry at 59.71, but this is why I always stress, if you're gonna swing trade, you have to wait for the daily close, because the algorithms know, the whales know, they know that people are going to try and play this as a breakout. And one thing that I've noticed, especially in the last few months, breakout trades tend to fail more often than they succeed. And it wasn't usually like that, but it's pretty much that's the way it is right now. And so you have to be very careful taking breakouts. So you have to be patient. And so if you were patient, you would never take this trade because you get the fake breakout right to our 1272 Fibonacci projection. It got reversed right off of that, and then you closed under the trigger. And so we have to wait. And so you got another day. And then today, another one. We came through the trigger, but we closed under the trigger. So it's obvious that this level is important, 59.60 or 59.71. So we really just need to wait for this stock to close over that level, 59.71 or 59.60. You could play around the numbers. It's the exact number is never the exact number, right? It's always going to be somewhat of a range. But really, that's what we're looking for on bros. We already went over CFLT. Kroger, I did take an entry here over $45 yesterday. We put an inside day here. I went for the 46 calls for next week. We did not close over the swing high anchored VWAP. So ideally, I want to see this close over 45.78. The trade plan that I put out was for a close over 45.32. We did get that yesterday, but we put an inside day in. That's just a consolidation pattern. If you look at an inside day on a smaller time frame, it's basically just a wedge, and that's basically what we have here, right? So you have your wedge forming right here, which looks like it's starting to break down already. What I would probably do is cut the trade under that level. I'll cut the trade under $45 and just revisit it when we come back up to that level. But I still like it. It looks pretty good. You could see we had 1, 2, 3 touches there. That gave me this line. And look at where we bounced back here. Beautiful move up. So to me, it looks still bullish. It just may need to consolidate for another few days. That's why I went out to next week with my contracts versus playing same week contracts. We already went with Microsoft, or excuse me, MS Morgan Stanley. So let's go over the last one. This is going to be SCCO. And by the way, if you guys have any chart requests, feel free to put them in the chat now. And once I finish up with SCCO, I'll go into some chart requests. So you could see on SCCO, we did have a breakout on December 27th over the trend line. We hit our first target here at the 236 retracement at 61.50. And then you can see we made a move up to the 382, up to the 50% retracement. We had a bunch of failure candles here. We pulled right back to the 236, bounced perfectly off of it. Now we're coming back up to that 50% retrace at 69.08. So, still in this trade from 65.87 back through the 382 here. So what I'll wait for is I may add, if we get a close over 69.08, I would just be very cautious going into that 618 retracement at 72.47. That's generally where retracements tend to really struggle. Sometimes they fail, sometimes they just consolidate under. Certainly if you're in contracts, that is definitely a place to take profit or exit the trade, because regardless of if you get rejected or if you consolidate under, premium is definitely going to burn, especially if you have a shorter dated contracts. And then once we get that break over 72.47, then we'll possibly see a move up to 77 and then 83. This is a copper play, Southern Copper Corporation. These metal type plays, they don't move like tech stocks or growth stocks. So you have to be careful and have patience with these types of trades. So yeah, that's pretty much what I've got for the review of the trades that basically I've put out over the last week. And obviously the NVIDIA day trade. So we're pretty much right on schedule. So I'll go into some chart requests here. So we got Zim. Zim is a name that I like. This is a shipping company, Zim Integrated Shipping. I've been talking about Zim for a couple of months now. You can see we broke the wedge here. We had a fake breakdown under here, but that volume shelf right here, that demand zone really saved us. There was a good amount of demand down here. So the dip was basically bought. And yeah, this is continuing to push higher now. The one concern I have is we're coming into that 1618 extension at 74.47. This is, basically what I was just talking about. So it's very likely, and I'll just erase that just so I could show you real quick on the chart. So I'm going to take that swing high, that prior swing high there, to my prior swing low, which is right there. I'm just going to extend the line out a bit. And you can see 1272, first target. 1618, second target. We're almost there. So if you're not already in, I would just wait for this to pull back, maybe retest 67, possibly retest 59, which was that first entry. But yeah, it looks pretty good. Let's just take a quick look at the higher time frame, the weekly. Yeah, I mean, it's, you know, still obviously a newer IPO. Let's drop an anchored view app. Look at the anchored view app from the IPO. Look at this this pullback, potential pullback entry right there, right there, right there. That's why using this anchored view app system is super powerful. It really will help you identify key levels of potential support and key levels of potential resistance. So notice how I say potential, because it doesn't mean that these levels are going to be support or are going to be. It's really more just a level of interest. So let's take a look at Tesla. And while I'm charting these out, if you guys and gals in the audience, if you have any questions, feel free to put them in the chart or in the chat as well. So going up to the weekly chart, you could see I've charted out a 1, 2, 3, triangle 4, wave potential 5 up here, and we are potentially in wave 5 still, in wave 4 of 5. So how do we see that? Let's go down to the daily chart. And I know for those of you who are either in the room or follow me on Twitter, I mean, I was basically calling this trade, I don't know, like every other day. Very, you know, very straightforward ABC retracement off the wave 3 high, counter trend ABC wave B to the upside. And now we've got a 1, 2, 3, 4, I think potentially wave 5 to complete our wave C to the downside. It doesn't necessarily have to be. This, instead of a 1, 2, 3, 4, 5, this could actually be an ABC, you know, continuation. This could be our wave C bottom where I have 3, and this is the bottom. It's very possible. I'm just leaving this up for interpretation. If we get another wave lower, this is where I would look for a potential entry. However, when you go down, you know, let's say, let's go to a 65-minute. Maybe we'll do a 30-minute. Yeah, there we go. So it's very possible that wave 5 actually has completed and we've started a new impulse wave up. And this could be wave 1, 2, 3, and then we're getting a more complex wave 4 here. So for me, the proof is in the pudding. If we break over 945, I think we bull. I think we go to $1,000. If we break below 899, I think we fall back down and we test 800. So we're really in a wait and see zone. It's not breaking down, but it's not breaking out. It's been consolidating for about a week and a half now. It's basically trading in a range. You know, the bulls and the bears are battling for who's going to control the stock. And so we have to wait. You really shouldn't be trading it in this area. It's going to waste your mental capital and you're just going to get frustrated. Wait for the bigger breakout. Wait for this to break over 945. Once it breaks over 945, this thing is going to fly. More than likely, it's going to fly. The only reason it may not fly if there's other things going on in the market, if CPI data comes bad, or if there's like a macro event that's affecting the market. But any little bit of good news, this sends it through 945. You'll see 979,000, potentially 1059 to the upside would probably be my top level. But yeah, no problem. I like to, you know, there's so many different ways to trade, right? I trade a couple of different ways. I know a lot of traders that trade one specific way or trade a couple of different, you know, other different ways. And there's a lot of ways to skin this cat. The problem is discipline and knowing the stock. I know Tesla really well. I know how it acts. I know its levels. And so I'm not going to waste my time trading it in a zone when I can wait for a stock like NVIDIA to break its zone and look at the type of move you get. This move you see right here off of NVIDIA, off of this symmetrical wedge triangle, wait for that type of setup on Tesla. Because when you zoom out, and here we go with there we go. When you zoom out, let's look at a weekly chart, right? look at this symmetrical wedge right here. What happened after the symmetrical wedge broke out? Big move higher. That's what we're waiting for here. And Tesla, it tends to do that. Here's another falling wedge right here, breakout. Here's another wedge right here, breakout, right? So when a stock has a certain personality, don't try and think you know anything different. Just go with the personality of the stock. Wait for those, those same types of setups and execute them how they were executed in the past. You just have to exercise discipline and restraint and patience and know when to get in and know when to get out. I use a system to get out. I scale out at percentages. So rather than waiting for certain levels to hit, I'm taking profit, especially in a market like now, I'm taking profit right away, because stocks have been reversing pretty quickly. So let's take a look at Shopify. So, all right, I'll delete that so we can just look at it real quick. So I'm looking at swing low, basically right here. I'm looking at a swing high right there. I'm going to use my Fibonacci retracement tool from that swing low to that swing high, and look at where we're bouncing, right at the 618. It's exactly where you would expect it to bounce. And that's exactly where you want it to bounce. You don't want these shallow retracements because then they tend to be more fake outs. If you get that deep retracement off of that 618, this is where you take the shot. This is where you get into Shopify, right? At 861 to 900. And, the low is 783. All right, so let's play this game. Let's say you take the entry tomorrow at 924 and your stop loss is at 779. Well, your target is back up to all-time highs. And so when you look at the risk to reward for that, it's basically 5-1, almost 6-1. I'll take that trade every single day, but you got to have the discipline to get in at 924 and make sure you're keeping a stop loss at 783, right? You do your calculations, but I'll risk $3 to make, I'll risk $1 to make $3. I'll definitely risk $1 to make $5.73. I mean, it makes no, it just makes perfect sense, but you got to know what you're trading. And, Shopify is a wild stock. It just it moves around. It's not something I trade. I'll be honest with you. I don't like trading Shopify. I don't like the contract pricing. I don't like the spreads. It's just there are easier stocks to trade. Even Tesla to a certain degree is not an easy stock to trade, but it tends to be easier than stocks like Shopify or what's another one, CMG. Chipotle does another one that have big spreads, low liquidity. There's decent liquidity on Shopify, but the spreads are just killer. But I do like it. I like this bounce here. I think from a long-term perspective, I really like it. Okay, let's take a look at CCJ. We go to weekly chart. Always like to start up at the weekly. We zoom out. Let's actually look at a monthly. Let's get a trend line going right here. So look at that. A lot of wicks right through that trend line, okay? Let's even do this. Let's get, so you got your touches here, false breakdown there. So from a long-term perspective, this actually looks like, a bull flag. Let's see where that retracement came down to, right? Here's your swing low. There's your swing high. And let me get that extended. That came further down than the 786. So that's right. We're on the monthly. I hate doing it on the monthly. Let's go back down to, let's go to a weekly. Yeah, it looks pretty good. I mean, it definitely is showing an impulsive wave up. So let's just chart this out real quick from a wave perspective. So looks like we have our wave one. wave 1, 2 right here. Right, so that's your 1, 2. This looks like it might be wave 3 up here. Let's check out the extensions here or the projections. Look at that, right to the 2618. So yeah, this looks like it's a wave 3 top right there. They had earnings this morning. Let's turn on after hours. It looks like they're gapping up. All right, well, there you go. Look at this. It's a good call, I think. So it looks like this is wave 1, 2, 3, 4, 5. So let's just focus now right here. So we have this. Contained in parallel lines. It looks like we're starting, we got false breakouts up here. I don't like when it goes through, but we got a gap up here. So yeah, this looks pretty interesting. Let's take a look at, yeah, so look, so here's your ABC correction right there. And then here's your 1, 2 setup right here. And this is wave 3. So what I would do is I'll go down to a 30-minute just to see it a little clearer. And here is your wave 1. Here's your wave 2. This is your wave 3. Wave 3, we'll do a projection. So it looks like it still has some legs. I would say this is probably subwave 1, 2, 3, 4. I think wave 3 could go somewhere between 23, let's say 24 and $25. It's probably where I'll put my wave 3. Now keep in mind wave 3s can extend. So just got to be careful. Obviously I'm not buying up here. Certainly not on earnings gap up. But what I would do is I'll just drop an anchored VWAP on that earnings gap up tomorrow and then track it. You know, if I turn on, let me just do this real quick. I'll turn on the earnings and you can look at a prior earnings like here. Here's an earnings gap up right there. Drop an anchored VWAP. You see how it breaks over it, it loses it. It has a false breakout, it loses it. It comes back up, it breaks out, it retests, and it goes. That's what you gotta look for. All right, cool. You're holding for a while, exiting. Perfect. Yeah, I would just watch it. I mean, there might be another entry for the continuation off of wave 3, but looks pretty good. All right, Twilio, and I'll do one more, and then we'll go into questions. Twilio, full disclosure, I did buy shares today. I just liked it back through 200. So it wasn't something that was on my radar, but I had an alert go off through 215. So I took some shares down here. I liked it. So yeah, I mean, it's let's go down to a 30-minute. Looks like it's giving a little back. I guess it had earnings. It's giving a little back here. No, I took this today through 200. That's right. Yeah, I think I executed it like a 201. So yeah, Twilio looks really good. I mean, I love the company. I love what they do. I love their product. I really like this for the long term. So I'm definitely going to be scaling into my position. I didn't take a full position. I just, started to nibble on shares for the long term. And there's other names that I like, like a Datadog. I think that reports tomorrow, I believe. So let's take a look at Lucid, but I do like Twilio. Yeah, Lucid's tricky. This count is invalidated. I did have a wave 5 target up here. That's invalidated now. Yeah, Lucid's tough. It's very difficult. these, I don't consider it a meme name, but it's meme-ish. It's very news driven. It's very difficult to do proper technical analysis on news driven stocks because you're just going to get gaps all over the place and just wild runs. So difficult to chart where this is, but what I will say, technically, I like it better over 2970 than where it is now. Looks like we do have earnings coming up on February 22nd. So yeah, I would just be careful going into earnings. You might get a little bit of a run. What is that? The 22nd, and today's the 9th. So you might get a little run. You might get a challenge of that $30 level and see what's what there. But I wouldn't be holding into earnings, not on Lucid. It's too wild. All right, so let's wrap up the chart request. Again, right on schedule, moving right along. And any questions? And if you have any questions, feel free to come off on mic, unmute yourself. Happy to talk to you. Sometimes it's a little easier to explain your question that way. Any questions?
Danny?
Yes, sir.
Hi. You have a Discord room as well that you do live trading in during the day, or
Yes.
it's just, okay. That's also included in the membership, right? The 3-month?
That is not. That's complete. I run that service with a couple of other traders.
Okay.
So that's just a separate, it's more day trading focused, although you do have my charts in that room, but it is completely separate.
It's separate. And when you say day trading, that's not hyper scalping, it's intraday, more like
it's intraday with some scalping. I mean, I think these days, probably the last couple of months, the shorter time frame day trades and scalps have been working much better than swings. Obviously, very difficult to hold trades overnight at the moment. So those types of trades are working much better, but there's certainly, you have to have the appetite for that type of trading, and it's not necessarily for everybody.
No, but when you say more scalps, is it like on 1 minute, enter on the top, the bottom of the minute and exit the top, or it's more of a 5 to 10, 15-minute hold? Or again, depending on obviously depending on the situation and the conditions.
Sure. No, I appreciate the question. Yeah, when I scalp, I'm on a 3-minute. I never go down to a 1 minute because it's just too fast. It's way too fast. You get a lot of false signals, a lot of fake outs, false breakouts. I like the 3-minute. I find the 3-minute to be the perfect marriage between the 1 and the 5. Sometimes the 5 is a little too slow. Generally, when the day starts, I like starting on the 3-minute. And then as maybe 15, 20 minutes goes into the market, I'll switch off to a 5-minute. But I do like the 3-minute. So, I mean, but that's me personally.
Okay, because I'm actually into the 15, 30, and 60 minutes. I look for the corrections and the reversals if I'm intraday trading.
Yeah.
And I'll wait for a reversal or correction to the 8 on the 15 or 30 or whatever, depending on how hot it was off the open. And then wait for that when the hourly flip, as they say, and then go in from there and then ride it out as long as it goes.
Right. Yeah. I mean, like I said earlier, there's no right or wrong way to skin this cat. I mean, there's so many different ways to trade. It all depends on what you're most comfortable with. And, especially like in the university, and especially more especially when I work one-on-one with my mentees, with my students, I'm not trying to teach you what I do. I'm trying to kind of get into your head and figure out what's your way to trade, what works for your, psychological mindset, because in the end, that's really what matters most. People might look at the way I trade and try and do it and can't and think they're a failure. But the reality is it just might be that you just don't have the mindset to trade like I trade, just like I don't have the mindset to scalp on the 1 minute. It's just too fast. I have to know what works best for me, and you have to know what works best for you. What I'm really good at is helping people identify what they're really good at and trying to cut out the noise and help them focus in on their style of trading. And my approach is definitely less is more. And I think that really shows through in my charts.
Well, hence the reason I went to 30 and 60 minutes, because the 1 minute and 2, even the 5, I'll watch the 5, is about the lowest I'll go. It's just, I find it slows everything down on the 15 and 30. So this way you get to see, like you say, the bigger picture, right?
Absolutely.
And not
Yeah, I
no
think
FOMO.
no FOMO, no FOMO. And listen, when it comes to FOMO, the thing is like people fall in love with their names. And you fall in love with a name, and that's what makes you chase. And so like one of my rules, is don't marry a stock. As
Yeah.
silly as it sounds, it's really important. Not every company is going to be an Amazon or an Apple that's going to have 25 years, right? A lot of the times we're just taking these trades, we're taking them for a ride. We're taking them for a spin. We're just going dating. We're going to make some money together. We're going to have some laughs, and then we're going to say goodbye.
That's it.
And if you look at charts that way, I mean, it's the right way to go about it, because if you fall in love, man, you're going to get burned. One day you're going to get married. You're going to be live happily after happily ever after, right? But sometimes you got to go through a couple of stocks before you get married. So.
Yeah. Well, there was even a coach said that, I can't remember his football or what sport it was, but he said that about players like the player, don't love the player.
Yeah, no, your heart can get broken.
You make decisions you wouldn't normally make because, oh, well, I love it. No, this.
Exactly.
Okay. Well, thanks again. And thanks for today's broadcast. Very informative, and I appreciate it.
Yeah, no, my pleasure, Ben. Yeah, so if there's no other questions, I just wanted to talk really quickly for those of you who are new to me or to my work, or are not members of my platform. I do have an educational platform where I do email out daily trade setups first thing in the morning, 8 o'clock Eastern Standard. Got 20 plus hours of trading education, very much like what I did today, but broken up into different videos, more along the process of how I trade. I do have a top 10 long-term conviction stock list that I basically update weekly. I'm not looking to day trade or swing trade these. These are position trades. You'll get access to all of my TrendSpider scans, my watch list, my trading rules, my documents, unlimited chart requests. Obviously, you'll have access to the office hours that I run every 2 weeks, and then my weekend video that I put out on Sunday, which will have like my top 10 to 12 charts. And then obviously throughout the week that I'm putting out at least 1 or 2 a day, sometimes a few more. And then I'll do, chart recaps, kind of similar to what I did earlier. So it's pretty straightforward, $79 for the quarter, $275 for the year. But I do have another plan that a lot of people tend to go for, that want to do one-on-one coaching with me. And so I know I have a couple of my coaching members in here, and so they know what this is all about. And so the good deal with this is, like, if you're gonna hire me as for one-on-one, my hourly is 90 an hour. So if you do the math, for 4 hours is what you're getting with the executive plan, it works out to be like, I guess, what is that, 360, so $150 for the year for everything else, and you'll get those 4 coaching hours included as well. So I find it's really good for people that, most of the people that come with me, they either do one session and leave, or they do one session and they stay for months. I have some that I've been working with for years. And the one thing that I found in trading, and I found this with myself first, which is why I'm doing what I'm doing, kind of paying it back, because I've had mentors along the way. And I realized early on that I was spinning my wheels, looking at YouTube videos, trying to figure out what's my style of trading. And it really wasn't until I started working specifically with a couple of people one-on-one that I was really able to identify what kind of trader I am and what my mindset is and how to work on the different issues that I was having trading. And so having, the ability to get me on a Zoom call where I can record the session, we can go through things, and then you'll have that basically forever. You'll have my ear more so in terms of, priority support. And I also throw in my Fibonacci course, which I'm developing, which I have, in all fairness, have been developing for a little while now, but I had a little bit of a slog over the last few months with a writing course that I was in. But yeah, outside of this, I've been trading full time for more than 2 years now. Like I said, in and out of the markets for 5 years. I'm not really going anywhere. So do really appreciate everybody that's stuck around till the end here. And yeah, if there's anybody else that has any other questions, happy to stay on at least for another 5 or 6 minutes. If you have no questions, I know, Raina, you have a chart request So let me go and share my screen. I'll look at ARK-K. I was actually looking at ARK-K this week, and it's starting to hold a level. I think we still need another, I would say another few, I don't know, maybe 2 or 3 weeks. So I did have this as my target zone to the downside, right around $70. And you could see we pretty much nailed that to the T. And so what I saw with this, pretty much what this looks like is an ABC correction, right? So you have your wave A, your wave B, and your wave C. And when I do my extension to the downside, you know, we're somewhere here in between the 1272 and 1618 extension to the downside. And so, you know, that's where I'm like, all right, we might have a bottom here on ARK-K. I'm not trying to call a bottom yet because, you know, we just have a little bit of price action to the upside here. Like if I go down to lower time frame, you know, maybe this is a 1-2 setup, right? Let me just get my channel tool. I always look for the channels. So if this is a 1-2 setup, this is how you confirm wave 3. It's got to break over that 1-2 channel. And so look at how that center channel is acting as resistance right here and right here. So I'm not sold yet. I might get a little excited if we get over 77.65. I think that's an area of interest. I would probably take some shares there. I get a little more excited over 80. And I think once we get over 88, definitely gets me happy. I think over 90, I think we test 100. Right, 98 and 99, right? The 100 right there. So it's looking better. But, you know, listen, this could also be a bear flag. This could also be this could also be wave 4 to the downside. So yeah, let me go up to a 65-minute. I'll show you what I'm seeing. So potentially this could be a 5-wave move down, and how that would look like. Here's your wave 1, here's your wave 2, here's your wave 3, potentially your wave 4, and then your wave 5. And if this is what this looks like, and this is the wave 4 top right here, then the move to the downside would look something like that. Like that would be my target right there, between 60 and 56. That would be my wave 5 target to the downside. It could potentially go a little further, maybe to 50. Painful if you're in it to feel that, but unfortunately, that's at least what I'm seeing on the waves. I mean, to the downside. This could be a 1, 2, 3, 4, 5 to the downside, or this could be an ABC and a wave 1, 2, 1, 2 right here. So really hard to tell. We have to wait and see. So yeah, that's pretty much it. We got a couple of minutes left. Once again, definitely appreciate each and every one of you that are here. For those of you that came in late, if you are a member, I will post this video in the room. And for everybody else, if you're not a member, certainly consider joining me if you are interested in, you know, becoming a better trader and learning, you know, my style of trading. Certainly if what I do resonates with you, then it makes sense. If it doesn't, then it doesn't. Then I appreciate your time and I appreciate you being here. So I appreciate you being here on Wednesday evening. I am actually here for a couple more days, heading on vacation on Friday. Business as usual. Still, I'll send out my trade ideas in the mornings. I just won't have as much access to the internet because I'm going to be up in the mountains for a little bit. One more question. DeFonte's in Brooklyn. Oh yeah, sandwiches are banging. Really, really good. I think there's also another location in Staten Island, if I'm not mistaken. But yeah, DeFonte's in Red Hook. Definitely got to try the roast beef sandwich with the gravy. Yeah, can't go wrong. Yeah, if any of you ever in the Brooklyn area, let me know. I will absolutely give you great places to go. Certainly the best pizza that I've ever had. So, Rainey, you're very welcome. It's always great. I appreciate you being here. M1, Ben, yeah, appreciate your questions. Listen, everybody, have a great evening. Remember, CPI data tomorrow. And I didn't really touch on this, but we do have that rate hike coming in March. It's coming. It's the rip the Band-Aid off, right? It's either going to be a quarter rate or it's going to be a half a point. If it's a half a point, I think it's going to be painful, and we're going to see a lot of those wave fours potentially turn into wave fives, and we'll see that final thrust move down to the, you know, to the next level down. If we get the quarter point, you know, it might be priced in based on price action. So if that's the case, maybe we trade sideways, we absorb that news, and maybe we start our journey back up to all-time highs. That remains to be seen. So be safe out there. And of course, you know, I've got your back. If you have any questions, you could always DM me in the room. And if you're not a member, you could certainly DM me on Twitter. More than likely get back to you pretty quickly. So have a great evening, everybody. Take care.
Bye.